Proving to be sticky. I think that is very much the elephant in the room, and the one thing that could disrupt that kind of immaculate disinflation and soft landing narrative would be core inflation that remains stickier than a lot of people currently expect. I think the other thing we need to pay attention to is what's happening more globally. The European economy is not in a great spot. We got some pretty downbeat numbers out of China overnight. It feels like economic activity is beginning to slow more significantly again at the global level. Whether or not the U.S. catches a cold is going to be a big question as we work our way through the next couple of months. But obviously, if that weakness abroad begins to feed into what's happening here, that's going to put this kind of soft landing narrative to bed, because it's going to create some downside risk around the trajectory for growth.
Well, David, growth is bad, but disinflationary forces might be good. When you put it together, is the data out of China this week good or bad for China? Good or bad for the United States?
So I think the data out of China is not great for China. I think that the tailwind it provides to the U.S. is around this idea that we are really nearing the end of our inflation journey. And we've seen this time and time again, right? When things begin to roll over in China, that does have an impact on the rest of the world. So I think that this could very much aid the inflation story in the United States. Where I'm a little bit more concerned is if it undermines a broader growth narrative, then we've simply killed inflation and killed growth as well, which is not what markets have been pricing in.
Inflation data tomorrow morning, on to PPI on Friday. Mike McKee has more. Morning, Mike.
Good morning, John. Well, we all know the numbers. We're expecting a slight rise in headline inflation, a slight drop in core, with both of those coming in on a 0.2 increase per the month of July. But it's really going to be a question of where you sit and what you're looking for, because there are political components to this and there are monetary components. Joe Biden is going to be looking at gasoline, beef, mortgage rates, and I'm using beef as a proxy for a lot of food prices. Beef prices are skyrocketing lately. That's the kind of thing that Americans notice, and it's a reason why you see some consumer confidence concerns going forward. Powell, on the other hand, is watching things that are going down. Housing, is it going to go down even faster than it has? Used cars, you just mentioned, they're down 11.6% on a year-over-year basis, so that's put downward pressure on inflation. And apparel costs have been leveling out and starting to fall. And of course, the biggest thing in here is the base effects. As I mentioned, a 0.2 drop last month, a 0.2 drop forecast for July, and there was no inflation basically a year ago. So we will see some sort of headline increase, but the month over month is what you want to see, because that's what would show the Fed that there is sequential progress being made. And then, of course, for the Fed, which is starting to talk about what they might do in September, it probably isn't going to be anything yet, but here's the dates to watch ahead. We get the PCE price index. There's the last day of the month, and then in September, lined up in a row, August jobs, CPI, and then the Fed meeting. So still a lot of data to go, but this will be a marker along the way. Won't be definitive tomorrow, but it will give the Fed an idea of whether they're still making progress.